The big money index signals pullback ahead. Hey everybody, Luke Downey here, going over our latest map signals insights. Our data has started to turn south, and that is due to selling starting to pick up under the surface of the market. Let's go ahead and check in on some data. So here we are, we're looking at a longer term chart of the big money index. This is going back to 2018. I've circled all of the periods where the BMI was in overbought territory and fell soon after. As you can see on the screen, you've got 10 instances, with the latest instance being a few days ago. Now, what I want to draw your attention to is typically whenever this yellow line falls out of overbought, so below this red area that you see, this dotted line, it tends to be a rather dramatic fall. Rarely do you get a fall and then a wobble and go back to overbought. So what can we expect when this line starts to fall? Why is it important? Well, we got to look at history. Here's what happens if we go back to 2014 and we see what the S&P, NASDAQ, and small cap 600 do on a 1 week all the way out to 2 month basis. Here's the bottom line: 1 week, 2 weeks, 1 month, and 2 months, all of these indices are down on average. Now, there are a few times where indices are up, but by and large, when the BMI is falling, institutions are selling stocks, and typically all of your indices are going to feel some market pain. So let's now visualize where we might be on the phases. There are 4 phases that we like to articulate in our big money system. Number 1 is huge buying and little selling. This is typically FOMO. This is when you can't imagine that a pullback is even possible. Number 2, which appears to be where we are now, this is when buying slows, selling starts to grow, and we might be near a peak. Keep in mind, we've got an election ahead, so volatility should rise over the near term. Then number 3, buying slows further, selling takes over, a pullback has begun. Most pullbacks, they end right here. Okay, this is when you get in your correction territory. You start seeing those headlines all over YouTube. Hey, stocks are falling, the end of the world. That's usually where number 3 is. Number 4 is going to be a little bit more dire. This is when there's no buyers whatsoever in the data. Sellers are in control. This is bear market territory, scary headlines, people envisioning bread lines, etc. This is your best buy time. This is when you want to be putting 2 hands out there and buying stocks. Rarely do we get there, but when we do, Map Signals is beating the bullish drum. So if we get to 3, you definitely want to start buying there, because that's generally when pullbacks end. That's when you start to get some opportunity. So let's go ahead and summarize. When the BMI is falling, expect downside for 2 months, but you want to be looking at buying the dip. Why is that? Because we are entering a very bullish time for markets. Since 1995, if you look from November through April, all market cap sizes do well. Here you can see the S&P 500, the small cap 600, and the S&P mid cap and NASDAQ. They all have ho-hum returns May through October. You always hear sell in May and go away. That's what they're talking about. Very seasonally weak time for the market. However, November through April, and we're talking about the election that's coming up, look at what happens during this 6-month period. S&P 500 gains 7%, small cap 600 gains 8.35%, the NASDAQ gains 9% on average, and then the S&P mid-cap 400 gains 9.35%. Again, on this channel, we have been talking about small and mid-caps. You want to own them. We've talked about NASDAQ. You want to own them. The data just continues to reinforce that. Don't be surprised if we get a little election jitters. That's normal. That's what you can expect. The BMI is telling us to expect a little weakness. But don't lose sight of the big opportunity starting in November. You guys remember to think long term. Most importantly, follow the data.